Hi, this is Mike, and we're looking at the Dow Jones. Now, in this video, I'm going to talk about the long-term picture and how my view has changed. Uh, this is why I've been taking time away from the charts to get rid of my previous biases and to approach it once again from a new perspective as I get closer and closer to hopefully what is the real count in this long-term pattern. So here you can see the European stock market joined on to the US stock market. And yeah, so I've come to the conclusion that what happened since 1500 or before that, up until the Great Depression, 1929, was a B wave zigzag, right? And the C wave was a weak 5 wave move, right? You can see the I is a 3 wave move, the the triple I, a 3 wave move, and then the V being a 3 wave move, more complex zigzag. Okay, and no rule broken with this one. So that leads me to then have to change my view on what the Great Depression move actually was. And I did look into it, and I suppose it can just be a C wave, 5 wave move, standard 5 wave move, really sharp. And then what we needed to see was a zigzag wave D. Okay, so this has brought me to the conclusion that wave E was the '08 crash. This is the end of a long-term correction that could signify the start of a major trend, right? So therefore, we're still in the early stages, obviously, but for me, it's been more about trying to get ahead of it before it happens. Now, as you know, I'm pretty bullish with cryptos long term, but we need to see some kind of down movement. And that's what I want to talk about in this video. And this is where I've sort of come from, is trying to understand why is crypto going to go so high, and what is what are the other markets going to do during that time. So this is interesting because the wave E was small when you compare it to the long term. Now these types of things, they can happen, but typically I'm careful with it. That's why I've been so careful in the past not to really just say that the '08 crash was, anything significant long term. But you know what? I think it is. I think it's actually like the end of a correction, and it's formed a base, like a support level, which cannot be broken. And I think that this is going to send us into a massive rally, possibly due partly to some kind of hyperinflation, right? So I think that inflation will continue to get worse, and it's just going to basically be a case that the money supply will increase dramatically over the next decade and into the future. So let me go to the real chart now, and this is how I've basically labeled the D wave, zigzag, right? The A wave up to the 60s, and then from the 87 crash up to the '08, 07, '08 crash, right? And that marked a support level. So this is a pretty big change for my analysis, but like I said, once again, that's why I took a break. Now I've looked at the NASDAQ, and it's a bit different, but it's kind of the same thing, right? The way that the .com bust, what that was, I believe, is a C wave followed by D and E. So basically, the wave one starting from roughly the same area. I won't get into that in this video. I just want to talk about the Dow Jones. So let me go to the daily chart now. And first of all, I want to highlight the wave one. I believe this is the wave one ending up here in 2018. We had an A, B, C, and this D wave has been ongoing, right? The D wave within the D wave is expanded, and now what we need to see is the final move for wave C. Now, what I believe is going to happen here is that this is going to be a little bit drawn out, right? Now, how this unfolds heading into the end of this move will be interesting, and I want to touch on that in a moment. Right, so you can see there's some old labels in there still. So before I get into the nitty gritty down at the smaller degree, I just want to say that once this D wave ends, right up here, actually I'll grab this one. Right, once this D wave ends, we need to see a wave E. Now that wave E might be significant, and the reason I believe it could be significant is because we might see a retest of the dotted line, the dashed line, right? In a case of resistance becoming support, right? So, Arias wave is not Elliott wave, right? It's a different thing. It's a different methodology. I created it over 8 year span, right? So my practice in using it has improved. Obviously, it's been improving since 2020 when I started posting videos here, ideas here, and I'm improving myself at the same time trying to improve my analysis. So, trying to make it better so we understand, moving forward, it's going to hopefully clear up a few things. Now, this is why I believe cryptos are going to go ballistic at some point, but they haven't completed their correction yet. So that needs to happen first, and I think it's going to sort of play into what's going on here, where we need to see some wave E come down in some kind of dramatic form. Now, the move that we saw down since, December 2021, whatever, right? I believe that was just an internal correction for the wave B of the wave D. Okay. I used to think that this was a complete wave D up here and that potentially we are already getting ready for a move higher, and this trend could be continuing shortly. But I don't think that's the case, simply because, and I'll go down to the 4 hour now, simply because of the subdivisions of this internal zigzag wave B in brackets. You can see that there's first the A wave, then an A, B, C. Where's the D? The D was expanded, right? So then that move down it came back to the end of wave A, which is typical for a type 1 zigzag in RES wave terms. That means that the wave B expanded above the end of wave A in brackets, but it came back to the area of the end of it. Okay, so what that means now is that we're in wave C, but you could see that the market has started to go sideways. Now, for me, this simply means that, it's going to struggle to make this pattern. So the sideways here could go on for some time. I reckon about a year, right? About a year roughly, heading into the end of next year. And once we do see that completed eventually, as you can see, I've started to do some analysis on it. And I believe there is a bit of a B wave is expanding. The internals are expanding in there. So this is still going to take some time to play out. And obviously I'll update as that happens. But we need to see a 5 wave move here. Now, whether this is wave 1, I mean, it makes sense that it is. We could see wave 2 end up back a bit lower before we see a 3, 4, 5. Now, why would wave 2 be so drawn out? Well, it's probably going to be some pretty crazy alternation between waves 2 and 4 of the C wave, right? That means that the end move will be sharp, up, parabolic, followed by a move down for wave E. Now, as I've mentioned before, the '08 low is the line in the sand. We can't go below that. How low it goes, probably back to the dash line, right? So we could see something like, at least 50% uh, pullback, right? I believe that can happen. Um, and that's also the area of the previous wave 4 of wave 3, which is an area that I believe corrections do come down to. The only thing is that we've seen the COVID move down, the the 2020 wave C that came back down to that area already, but I don't think it went low enough. I think that potentially it will come lower, and it sort of coincides with the whole interest rates, parabolic interest rate rises that are sort of continuing, and I believe they will continue to happen until this tops out. And when this tops out, I believe, yeah, it's going to crash the market, but they're going to have to drop the rates in a in an unprecedented manner, and that's going to send the money supply through the roof, cause inflation, and it's going to spur the next massive bull run, probably one of the biggest bull runs we have seen uh, to date. And I think that's going to sort of lead into the hyperinflation scenario, and it's going to cause even cryptos to go pretty high, right? And that doesn't mean that we're getting richer. It just means the money supply is getting watered down. But in turn, it could, do some interesting things. Let's put it that way. So that's my video for now. For this, just wanted to share my updated view on the Dow Jones. Hopefully, it's helped you understand a little bit more about how I see the market and why I would be so long-term bullish on crypto and why I believe there's still some more downside in crypto. So I'll catch you in the next one.